in this video, we are going to take our time to answer WAEC related questions. Basically, we are going to look at 2023 WAEC, and we'll be looking at the objectives. You know, WAEC accounting comes in 3 sections. Even if it is spelled out in 2, I know it is 3. You have the objective and the theory. Now, the objective is 50 questions to answer all, while the theory is in section A and section B. So it may interest you to know that even if what you will see on your paper is 2 sections, I want to tell you it's 3. Because even in section B, you have A and B. They will tell you, in the theory rather, you have A and B. They will tell you to answer 2 questions out of section A and 3 questions out of section B. Section A comes with 4 theory questions to answer 2, while section B comes with 5 questions to answer 3. So, and each of them carries 15 marks. But in this video, we are going to concentrate on the theory. And what I'm going to be doing, I'm going to be telling you why, you have to choose a particular option. Why a particular option is the correct answer, and why the other options are not correct. And I also mentioned some of the technicalities in answering some of these questions and how to manage your time effectively. In the OBJ, you are not expected to prepare account. What you need to do, they want to check your accounting skills, your ability to master and manage your time effectively and to be very, very accurate. So we are going to start with question 1. All right, question 1 says, one of the internal users of accounting information is the dash A, government, B, management, C, creditors, and D, investors. Internal users of accounting information are the people that are inside the organization. People that are inside the organization. People that are within the organization. So when you hear internal, it's talking about inside. So of course you know that it cannot be government, because government is not in the organization. It cannot be creditors, because creditors are people, we call them suppliers. People that you have gone to buy the item from. It cannot be investors. Investors are outsiders who have invested into the business. So the answer is B, management. Management are the people in charge of controlling, planning, and managing the activities of the business. Let's look at question 2. They say a crane hired by a building construction company will be classified as dash. This is more like a manufacturing account. They said a crane that hired by a building construction company will be classified as dash. A financial cost, B, a direct manufacturing cost, C, an overhead cost, and D, an administration cost. Now, a financial cost is the money that is spent on capital items. Financial cost is the money that is involved in, or what we call the money that is spent in running the business. While a direct manufacturing cost is the cost that is incurred in producing a particular product. And then an overhead cost is a cost that is not traceable to a particular item. While an administrative cost or administration cost is a cost in the general administration of the business. So looking at a crane is designed for a particular activity in building construction. So because it is designed for a particular activity, the answer is a direct manufacturing cost. Now let's look at question 3. A business should not lay claim to any profit before it is earned. This is in accordance with the A, consistency concept, B, prudence concept, C, dual aspect concept, and then D, going concern concept. These are accounting concepts. Accounting concepts are principles and policies that determine accounting practice. And when you hear of consistency Consistency is talking about a constant adoption of a particular accounting method. If you are using a particular accounting method, you have to be consistent with it, or you have to be consistent with it. And then dual aspect concept is talking about the double entering principle that deals with debiting and crediting. And then going concern is a concept that looks as a business as something that will exist for eternity. They look at the business as something that will exist forever. So looking at it, they said business should not lay claim to any profit before it is earned. You can see that it cannot be consistent, it cannot be dual aspect, it cannot be going concern. Even without understanding the meaning of prudence concept, you know that the answer is prudence. It is only prudence that will tell you not to lay claim to any profit before it is earned. And then the next one is like an account that need to be prepared. He said, use the following information to answer the questions. We have trade creditors, 31st December 2020, 4,000. Paid for purchases in 2021, checked, 110,000. Carriage invoice, 1,000. And trade creditors, 31st December 2021 is 6,000. Now the question is, the total purchase in 2021 is dash. This is a typical example of what a control account is. Now, control account is an account that is prepared for debtors and creditors. Let's quickly manipulate this on the board, and then so we can get our answer right. Now, we are going to prepare this on an account. Let's prepare our creditors account. Creditors account. This is how it looks like. Now, in creditors account, what will make you what you are owing, what will increase what you are owing your creditors will be credited, and whatever will reduce what you are owing them will be debited. Now, let's look at it. They said trade creditors 31st December 2020. As you can see now, the current year here, the year we are working with is 2021. So as at the end of 2020, the money we were owing is what? 4,000. So you come here, you write your balance brought down is what? 4,000. And then within the period, it said we pay, in 2021, we pay 110,000. So since we have made payment of 110,000, that means that the money that we were actually owing is reduced. I told you that what we reduce, what we are owing is credited. So you come here and you write check, because it was paid in check, and that check is what? How much? Is 110,000. Let's put our Naira sign. All right. Now, the next one, they say carriage invoice. Carriage invoice is the amount of money spent on the product from the destination of the supplier down to the destination of the business. So this will always increase your purchases. So since it will increase your purchase, you write your carriage invoice here. Carriage invoice there is 1,000. And then you have trade creditors. This is 31st December 2021. As at the end of the current year, how much are we owing? We are owing was 6,000. That is your balance carried down is what? 6,000. So how do we now do our credit purchase now? Our purchase will now be here. Our purchase will now be here. How do we get our purchase? You add up what you have here, and subtract it. The difference will give you the purchase. Quickly use your calculator so you can be very, very correct. So you have your 110,000 plus 6,000. That's 110,000 plus 6,000. It will give you 116,000. On the debit side, we have 116,000. Then on the credit side, you have 5,000. So let's subtract 116,000 minus 5,000. You'll be left with what? 111,000. 1, 1, 1, 1, 2, 3. So your total column will take the highest number, which is 116. 1, 2, 3. So from this solvings now, your answer is 111,300, which is option D. That is the answer. So the answer is option D. All right. Let's look at, they said the balance carried down on trade creditor will be recorded in the balance sheet as the balance carried down here. What we call balance carried down, which is this 6,000, is the amount of money you are owing. And you and I know that when you are owing, you are liable to whoever you are owing to. So the word liability is derived from liable, being liable to somebody. So let's look at the options. A, current asset. It cannot be current asset. Current asset are items that cannot last for more than 1 year. Fixed asset are items that can last for more than 1 year. It cannot be long-term liability because these are debt that you pay beyond 1 year. And then, so the answer here is also D, short-time liability. The accounting concept, which is the basis upon which assets of a business are valued, is the dash. Consistency. It cannot be consistency. I've explained consistency. I've explained dual aspect. I've not explained historical concept and accrual concept. Historical concept is a concept that looked at the cost. We call it, either you call it historical concept or you call it the cost concept of accounting. It specifies that assets are valued based on their historical cost. So this is what certified, or this is what satisfied the requirement here. The answer is historical cost. So it's C. Use the information to answer the question. The following transactions relate to Usai Enterprises for the year ended 31st December 2020. We have purchases 160,000, return outwards 880 naira. You see, and then carriage inwards is 740, return inwards is 640, sales 195,000, salaries 27,600, and closing stock is 14,100. They now said that the cost of goods available for sales is dash. At this point, you still need your board to do this. This is why I said students should understand and master the act of solving questions without preparing an account. Now, cost of goods available for sales. Cost of goods available for sales, we call it cost of goods available for what? Sales. Cost of goods available for sales is simply opening stock plus purchase, or what we call net purchase, plus net purchase, plus net purchase is we give you cost of goods available for sales. So opening stock plus net purchase, where your net purchase is equal to what? Purchase plus carriage inwards minus return outwards. Now let's look at this together. Opening stock from the question is what? There is no opening stock. So this one is out. Opening stock is out. You are left with what? Net purchase. Net purchase is purchase plus carriage inwards minus return outwards. What is purchase in the question? Purchase in the question is 160. So you have 160,000 plus your carriage inwards is what? Carriage inwards is 740. 740 minus return outwards. Return outwards is 880. 880. So at this point, don't forget to use your device to quickly find out the value. You have 160, 123, plus 740, plus 740, 740 minus 880. It will give you 159,860. 159,860. 159,860. 159,860. So your answer is 159,860. So 159,860 is the answer. Now look at the options. 159,860. That's option A. Let's quickly go to the next one. The next one we have, they said the gross profit. Now, how do we calculate our gross profit? Please don't forget that our cost of goods sold is 15 because it will help us to get our gross profit. So what I'm going to do now, I'm not going to wipe this. I'm going to write 159,860. So that is our what? That's our cost of goods sold. Meanwhile, gross profit is simply cost of goods sold minus cost of goods sold minus net. No, gross profit is net sales. Is net sales minus cost of goods sold. So net sales minus cost of goods sold will give you gross profit. Let's start with net sales. Net sales is equal to sales minus what? Returns inwards. What is sales from the question? Sales from the question is 195,300. 195,123 minus return inwards. Return inwards from the question is what? 620 minus 620. Let's use our calculator again. 195, you have 195,123 minus 620. That will give you 194,380. 194,380. That is this is your net sales. What of cost of goods sold? Now, your cost of goods sold is equal to your cost of goods available for sales minus closing stock. So it's simply cost of goods available for sales minus closing stock. We've already gotten this value. What we are looking for is only closing stock. So this will give you this value 159,860 minus closing stock there is 14,100. 14,100. What will it give you? Let's get it right. We have 159,860 minus 14,100. What is the value there? The value you have here now is 145. This is 145,760. So your cost of goods sold is 145,760. Haven't gotten your cost of goods sold, it will now be very simple for us to put in the values to get our gross profit. So our net sales here is how much? It's 194. So you are going to say your gross profit is equal to net sales 194,380 minus your cost of goods sold. Cost of goods sold is 145,760. So what will now be the answer? Let's go. Your is 194,380 minus 145,760. So the answer is 48. You have 48,620. 48,620. If you look at the options, it cannot be A, it cannot be B, it cannot be C, but it is C. C is what satisfies our answer. I say 48,620. So the answer is C. All right, let's make progress. Now, they say the net profit, beautiful. What you don't do, you don't easily wipe your answers. Now, we have gotten our gross profit to be 48,620. If it is 48,620, what will the formula for net profit be? Formula for net profit, your net profit is simply gross profit minus what? Expenses. Let's look at it. The expenses in the question. How many expenses do we have there? We have just one expense. It cannot be purchased, it cannot be returned outwards, it cannot be carried inward. The only expense we have in this question we have not used is salaries, which is 27,600. So quickly bring your gross profit here, which is equal to your gross profit is 48,620 minus what? 27,600. 27,600. So let's do the arithmetic here. You have 48,620 minus 27,600. What is the answer here? Our net profit is, this will give us 21020. 21020. Let's look at the answer. 21020. So the answer is C. 21020. All right. The concept which underlies double entry bookkeeping, we've already talked about this. It cannot be accruals. It cannot be money measurement concept. It cannot be historical cost. Money measurement concept is just talking about the fact that accounting transactions, he said only transactions that can be measured in a monetary terms are accounted for. Like the efficiency of management cannot be accounted for on the financial statement. So it cannot be that. Historical cost, we have defined that to be the concept that is used to measure assets. And then accruals has to do with owing and prepayment. So the answer to this one is B. Which of the following items is a tangible asset? Tangible assets are assets you can touch and feel. They are assets you can touch with your hand. Goodwill is not tangible. Lease is not tangible. Copyright is not tangible. They are all intangible assets. The only tangible asset here is machinery. Discount allowance is shown in financial statement as an expense. Discount allowance is a deduction you make on your items for your customers. So it is treated as an expense. It cannot be an income, it cannot be an asset, it cannot be a liability. So the answer is A, an expense. The reason for treating carriage inwards in the trading account is because it is an expense on goods sold to customer. It cannot be. If it is an expense sold for goods, if it is an expense on goods sold to customer, it cannot be called inwards. It must be called carriage outwards. Carriage outwards is an expense item in the profit or loss account. It does not appear in the balance sheet. It is expense on goods purchased. The answer is it is expense on goods purchased. Carriage inwards has to do with money you pay on the item from the destination of your supplier to the destination of your business. So the answer is D. Wages of machine operators in manufacturing account are treated as, now in manufacturing account, costs incurred are divided into three. We have what we call direct costs, indirect costs, and then administrative costs. Now, under direct cost is divided into direct material, direct labor, and direct expense. Direct labor has to do with the money that is paid to the individual that is directly involved in the production of the item. While direct expense has to do with the cost incurred that is traceable or that is traced to the production of a particular item. While direct materials are the cost incurred in getting the materials that are directly involved in the production of a particular item. For instance, if I'm making bread, the cost of getting a flour is direct, it is material. And then the cost of the person that is baking, the money paid to the person that is baking the bread is what? Direct labor. So from these options now, you see they say the wages of machine operators, the person that is directly involved in operating the machine. The money that is paid to that person cannot be direct expense, it cannot be indirect expense, it cannot be indirect labor. Rather, it must be what? Direct labor. Use the following information to answer the question. Sonny acquired plant and machinery costing $120,000 with an estimated useful life of 4 years and residual value of $2,000. The sum of the year-digit method is used. The depreciation to be charged for the third year will be dash. Now, depreciation is just the reduction in the value of fixed assets or the part of the asset that is used up in the production process. And then we have different methods of charging depreciation. We have straight line method, diminishing balance method, we have revaluation method, disposal of asset method, and then sum of the year-digit method. Now, in using sum of the year-digit method, we have a very simple formula that is used to determine the depreciation for the year. Now, the sum of the year-digit method is calculated like this. First of all, you have the years, and then you have the digits. The years from this question is 4. So you have 1, 2, 3, 4. And then the digit will start from 4 and then in descending order. 4, 3, 2, 1. Now you're going to add up the digit side. If you add 4 plus 3 is 7 plus 2, 9 plus 1 is 10. Now, having arrived at this 10 is what is the figure that is going to be used to determine the depreciation for each of the year. Meanwhile, for you to get the depreciation that is charged or that is chargeable to each of the year, subtract the cost of the asset from the residual value. What do we mean by residual value? Residual value is what we call the scrap value. The value at which you are willing to sell the asset at the end of the asset useful life. Just as human beings will die away one day, so will our asset can depreciate and fizzle out. So at the end of the lifespan of the asset, you can reclassify the asset or you may want to sell it out. So the value at which you are willing to sell out the asset is what we call the residual value. Hence, to know the actual depreciation for the year, subtract that residual value from the value of the asset, from the cost of the asset. So now the cost of the asset is 120. So it's going to be 120,000, 1, 2, 3, minus what? 2,000. So you'll be left with 118,000. So 118,000 is the value, the depreciation, the value of the asset that is going to be what? To be depreciated. Now, let's start with year 1. For year 1, you are going to have, let's write our 118,000 here. Let's write it here so we can have enough space to begin to calculate. Now, for year 1, you are going to have 4 over 10 times 118, 1, 2, 3. That's year 1. For year 2, remember what we are looking for is year 3. So for year 2, you have 3 over 10 times 118,000. For year 3, you have 2 over 10 times 118,000. And then for year 4, you now have 1 over 10 times 118,000. Now, our area of interest is on year 3. So let's look at year 3. Year 3, you can say 0, we cancel 0, and then you just multiply 2 by 11800. Or you just go ahead to divide 2 by 10 and multiply it by 180. So let's go. Let's do with this. 2 divided by 10. It will give you what? Then multiply it by 118,000,123. The answer will give you 23,600. So that happens to be the answer. Now look at the options. We have A is 4,000, B is 3,000, C is 2,000, and then D is 1,000. Looking at the question here, our solution here, and look at it, is not correct. So what you are going to do now is you see that the answer that you have here is not in the option. Don't be panicked. Sometimes students will now waste time on this particular question, trying to solve again, when time is going. You have just 1 hour to finish 50 questions. Once you are done with it and you are very sure that you are correct, skip it. Sometimes the examiner can deliberately introduce a question like this to check if you know what you are doing. So if you take any option here, that means you are wrong. You don't know what you are doing. So what you just need to do is to move on. You go to the next question. The next question said that the value of the asset at the end of the first year is dash. From this, now at the end of the first year is this. So let's quickly look at the end of the first year, which is 4 divided by 10 times 118,000. 4 divided by 10 times 118,000. What is it? It's 7240. This is 47,200. 47,200, which is not also in the option. You see, A is 8,000, B is 5,000, C is 3,000, and D is 2,000. The same thing is applicable. Let's move on. We go to the next question, question 17. The allocation of funds from treasury to accounting heads in public sector is called A is float, B vote, C environment, and then D is budget. It cannot be float. Float is the amount of money given to a petty cashier at the beginning of the beginning of the period from which the petty cashier is expected to make expenses, petty expenses. And then at the end of the period, the petty cashier will be reimbursed. That system is what we call the imprest system. So it cannot be float. Let's look at vote. Vote is the term that is used in public sector to describe a situation where government control his expenditures and they allocate resources. And then environment is just a term that is used to transfer items from one account to another. And then budget is what we call your targets. You know, a statement or a document that contains what the items you intend to achieve within a period. So the answer to this question is B. It is vote. It is vote. All right. Let's quickly go to 18. The source of funds available to local government / district assembly include common fund allocation, excise duties, road tolls, and none of the above. Common fund allocation, we are aware that if it is in the federal system of government, federal government have certain allocations they give to this local government. And then excise duties are just charges on goods, while road tolls are those collections that you see at the park. Those persons you see, those local government persons you see at every park collecting money. This is what we call road tolls. Money that is going into the pocket of the local government from taxi drivers and public drivers. So, but the answer here, they said the source of funds available to a local government and district assembly includes, number one is fund allocation. So it's going to be fund allocation. The B and C basically belongs to the state and the federal government. Then the next one, they say carriage inwards on raw materials is recorded in the dash. Carriage inwards on raw materials. Remember, this is a manufacturing account. Manufacturing account is divided into 3 parts. The first part is the manufacturing account. The second part is the profit, is the trading account, and the third part is the profit or loss account. And when you hear of raw materials are materials in their unrefined state. So the expenses that you incur in bringing these materials in their raw state into the company is what we call carriage inward. So it must be in the manufacturing account. It cannot be in the trading account, it can't be in the profit or loss account, and it cannot be in the balance sheet. So the answer is what? Manufacturing account. They say use the following information to answer question. The Health Department of Banjul local government incurred the following expenditure in 2020. Now we have construction of hospital was 200,000, purchase of hospital bed 20,000, purchase of stationaries 15,000, salary and wages 60,000, purchase of drugs 50,000, and purchase of X-ray machine. The capital expenditure for the year is that. Now, capital expenditure, they are cost or money spent on fixed assets, or they are money that is spent on assets that are of capital nature. Assets that takes the form of a capital. Assets that can last for a very long time. And from this transaction here, we have construction of hospital was, let's add them together. That's number one, that's 200,000. Plus purchase of hospital bed, 20,000. 1, 2, 3. Plus it cannot be purchase of stationaries. Stationaries are recurrent. It cannot be salary and wages, they are recurrent. It cannot be drugs, they are recurrent. The last one is the purchase of X-ray machine. So plus 100. 1, 2, 3. So the answer there is 320,000. So it cannot be A, cannot be B, cannot be D, but the answer is what? C. Let's go. Let's look at, they said the recurrent expenditure for the year is this. If we have had 320 as a capital expenditure, what is the recurrent expenditure? The recurrent expenditure has to do with those short-term spendings, short-term expenditures. They include, number one, purchase of hospital beds. No. Purchase of stationaries, that's 15,000. And then salary and wages, that's 60,000. And then purchase of drugs, that's 50,000. So the answer is 125,000. So it cannot be A, cannot be B, cannot be C, but it has to be D, which is 125,000. All right. Now, reliability as a quality of accounting information means that accounting rules and guidelines are applied, information is comprehensive, report is prepared promptly, information is prepared based on evidence. Now, when you talk about reliability, what really gives an accountant the confidence to work on an information or accounting information is what we call objectivity. Objectivity is just a concept that talks about evidence or proofs of transaction. So it cannot be rules and regulations and guidelines are applied, no. It cannot be information is comprehensive, no. It cannot be report is prepared promptly, no. But the information is prepared based on evidence. So the answer here is D. The error that affects the agreement of a trial balance total is dash. Now, error is simply mistake, accounting mistake. When you want to prepare an account, it is possible that you can make mistake. So the error that you make when preparing account is what we call accounting error. Now, we have errors that will affect the total of the trial balance and errors that may not affect the total of the trial balance. Example of errors that will affect the total of the trial balance include what we call error of omission, commission, compensating error, and error of transposition. Now, if you look at this question, you see that they say error that affect the agreement of the trial balance. Error of commission is here, which is based on similarities between names or accounts. Error of principle, which is based on wrong classification of account. Compensating error, which is based on when two equal level of error are being committed in the same account, the two will cancel themselves out. And then casting errors. Casting error has to do with counting. In accounting, casting means counting. So instead of you to say we are counting money, you say we are casting money. So casting error has to do with error during counting. So the answer here is D. Profit distributed to ordinary shares of a limited liability company is the profit distributed to ordinary shares. You cannot call it interest, you cannot call it surplus, you cannot call it reserve. It is called dividend. Whatever that is given to an investor into your company at the end of certain period is called dividend. Interest is just what is charged as a result of maybe an overdue loan or as a result of investment that you are expecting, and then surplus is just an excess of income over expenditures, and then reserve is the money that is set aside out of profit for a particular purpose. If it is particular reserve, if it is general, then it's not specified. It is called general reserve. So the answer here is dividend. The purchase day book is used to record. Purchase day book is a subsidiary book that is prepared to account for daily purchase on credit. So they said A, cash purchase, credit purchase, purchases returns, total returns. The answer is credit purchase. In the final account of a limited liability company, the debenture interest paid is recorded in the dash. The debenture interest is recorded in the dash. We have the trading account, we have the profit or loss account, we have the capital account, and we have the recurrent account. It cannot be in the trading account. The trading account basically talks about the activities involved in buying and selling. But the profit or loss is where the expenses incurred within the period is compared with the gross profit. So the answer is what? Is B, profit or loss account. Supplier's personal account are found in the supplier's personal account. When you hear of personal account, we are talking about account of individual. Account of individual. So when you say, when you talk about personnel, you say supplier's personal account. Supplier's personal account is found in the dash. Now, you understand that purchase ledger is an account that is prepared to take care of all the purchases. And then the individual persons where you buy the items from, you can see it in the purchase. In purchase, you see you bought it from Paul, you bought it from Andrew, you bought it from Samuel. These individuals, you see them in the purchase ledger. But sales ledger talks about people that you went to buy the items from. While private ledger is simply drawings and capital. The nominal ledger is for expenses and income. So the answer here is A. Memorandum branch account is prepared to determine dash. Memorandum branch account is prepared to determine dash. Memorandum branch account is prepared to determine gross profit. It cannot be credit sales. It cannot be closing stock. It cannot be opening stock. Nobody prepared account to determine credit sales. Of course, you should be able to determine your credit sales from your sales day book. You should be able to know your closing stock and opening stock, probably from your trading account. So, but for memorandum branch account, this is an account that is prepared at the branch to determine gross profits. They used the following information to answer the question. They said, Tyrus Limited was incorporated with the legal right to issue 5 million ordinary shares. The company has issued 3 million of the shares at 0.60 per share to date. The company has a cost of this. All costs have been paid by shareholders except for 100 owing from one shareholder. The paid off share capital is dash. Very simple. This one is under the topic called issue of shares. Now let's analyze this question together. The Tyrus Limited was incorporated with the legal right to issue 5 million shares. That's what that was issued. The company has issued 3 million of the shares at this. So the issued capital is 3 million at the rate of what? 6 kobo per share to date. The company has made calls of what? 4 naira per share. All calls have been paid by shareholder except for what? 100,000 owing from one shareholder. So it's simple. Just multiply, do your multiplication, do 0. That's 4 naira times 3 million. You're going to have 12,000. You're going to have let's do it on the board. So your account here, what they said the company have issued 3 million of the shares at this. To date, the company made a call for what? 0.40 at what? 3 million. So you're going to multiply this by this. If you multiply, you're going to have 120 1, 2, 3, 4. That you have 120, that's 1,200,000. You have 1,200,000. You have 1,200,000. 1,200,000. So what you are going to do now is, he said that something is owing. They are owing 100,000. Subtract the one they are owing minus 100,000. Minus 100,000. It's going to give you 1,100,000. So 1,100,000 is the answer. This is 1,200,000 that you are expecting, but they said that 100,000 is owing. So you subtract 100,000 from it to give you the answer of D, 1 million. The answer is D, 1,100,000. Use the following information to answer the question. They said the authorized number of shares is that. Very simple. Now, remember they said the company has issued, okay, they said the company was incorporated with the legal right to issue 5 million ordinary shares. The company has issued 3 million of the shares at 60 naira per shares. Now, what is there is, what you are looking at is the authorized capital. Authorized capital is a capital that the company is allowed to issue. And from this, you are going to see that it is not 8 million, it is not 3 million, it is not 100,000. It is what? 5 million. They look at it, it's stated, they said with the legal right to issue 5 million ordinary shares. So the answer is B. The account maintained in the nominal ledgers are maintained in the nominal ledger. They cannot be income and capital. Income is there, but capital is not a nominal account. Capital is a private, it falls under personal account. And then expenses and income, liabilities and capital. Liabilities fall under personal. We have personal account and impersonal account. Asset and liabilities. Asset is real account. So the answer here is expenses and income. Which of the following items are apportioned on the basis of purchase in preparing the departmental account? Apportionment is based on usage. Now, selling and distribution expenses cannot be. Lighting and cooling expenses cannot be. Carriage outwards cannot be, because carriage outwards go with sales. The only item here that goes with purchase is what? Carriage inwards. Carriage inwards is the only items that goes with what? With purchase. So the answer here is going to be what? C. Two-column cash book records. Two-column cash book records receipt and payment in cash only. Remember, two-column cash book is an account or a book that looks at cash receipts, cash and check receipts, and then cash and check payments. Those two columns are considered cash and check receipts and cash and check payments. So let's look at the options. A, receipt and payment in cash only, receipt and payment by check only, or receipt and payment both in cash and by check, or receipt and cash only and payment by check. The answer is C, or receipt and payment in both cash and check. Okay, use the following information to answer the question. The transactions of all Girls Social Club for the year 2021 are as follows. Bar sales is 30,000, bar purchase 17,000, and rent is 1,200. 31st December, you have 2020 and 2021. This is stock at bar, opening stock and closing stock. Owing for bar supplies, this is 6,500 and this is 7,300. The value of purchase for the year is dash. It's a very simple creditors account as well. So we are going to look at creditors account at this point. Anytime you are giving this kind of question, you are giving the value of the item at the beginning, what you have paid, and then what you are owing. Just know that as long as you are the one owing, what they are expecting you to prepare is called creditors control account. Let's quickly get the sketch of our creditors control account. Let's write creditors account. Creditors account is a credit side, debit side. Now, when you are preparing your creditors control account, I have said earlier that whatever will increase what you are owing your creditors will be credited, and whatever will decrease what you are owing them will be debited. So from this question, it is stated clearly that as at last year, which is 2020, remember our current year is 2021. We are working with, they say the transaction of all Girls Social Club for the year 2021 are as follows. So our current year is 2021. So let's look at it. At the end of last year, at the end of 2020, we are owing 6,500. That is to say that this is the amount of money that we started 2021 with. So you come here and you write your balance brought down is how much? 6,500. And then at the end of 2021, we are owing 7,300. You come here, you write your balance carried down is 7,300. You have gotten that. Now let's look at it again. They said bar sales is 30,000. Bar purchase is 17,000. And then rent is what? Rent is the, so the one that you pay, you made payment with cash. The one that you made payment with is what? 17,000. So you come here, you write your cash. The cash there is what? 17,000. So let's go. Your purchase will be here. So let's go. Quickly use your calculator. You have to add 17, 1, 2, 3, plus 7,300. What is that? For the debit side, you have 24,300. And then let's go. The credit side is what? 6,500. So let's subtract 24,300 minus 6,500. You'll be left with what? 17,800. So 17,800 is the answer, while 24,300 will now be your total figure, 24,300. And then your balance brought down is 7,300. So your purchase is 17,800, which is option A. Option A. All right, so let's quickly look at the next question. They said the net profit on the bar to be transferred to the income and expenditure account for the year ended 31st December 2021 is dash. It's a very simple thing. We have gotten our purchase previously as 17,800. So let's quickly write it here. Purchase 17,800, so that we will not forget. Now, we want to look at the net profit. What is net profit there? Before you can get to a net profit, let's start with our gross profit. Our GP is simply sales minus cost of goods sold. Cost of goods sold. Cost of goods sold. So, sales from the question is how much? 30,000. Cost of goods sold is simply opening stock plus purchase minus closing stock. Opening stock from the question is how much? 6,500 plus purchase is 17,800 minus closing stock is 7,300. Let's quickly use calculator to get this value. We have 6,500 plus 17,800 minus 7,300. So the answer is what? 17,000. So you are going to have your GP is equals to 30,000 minus 17,000, which is equals to 23,000. 23, 1, 2, 3. So your gross profit is what? Your gross profit is 23,000. Let's look at it again. 6,500 is your opening stock. 6,500 plus your purchase. Purchase is 17,800. 17,800 minus 7,300. You have 17,000. So 17,000 is your cost of goods sold. Cost of goods sold is, so when you subtract, it's going to give you this. So your net profit is equals to gross profit minus expenses. So how much is expenses in the question? Expenses in the question is simply 1,200. We are using the wrong figure. We are actually using the wrong figure here. The opening stock is 1,400. 1,400 plus purchase is 17,800 minus closing stock is 1,600. So let's go. Let's do it this time. You have 1,400 plus 17,800 minus 1,600. You have 17,600. 17,600. So you have 30,000 minus 17,600. What will it give you? That will give you 12,400. So this 12,400 is your gross profit. So your gross profit is it. Then net profit is gross profit minus expenses, which is 12,400 minus what? 1,200. Is equals to what? 12,400 minus 1,200 will give you 11,200. So 11,200 is the answer. But from the option here, the option that is very close to the answer is D, which is 11,600. So like I said earlier, if you solve and you are very sure of your solvings, and then you look at it and the option is not, the answer is not in the option, don't get panic. Sometimes the examiner may want to see, want to know if you really know what you are doing. So you can just skip that. Don't choose any option, because any option that you choose that is not correct just automatically make you fail this particular question. So you just move on to the next question. The next question says, which of the following rule is applicable in the absence of a partnership agreement? Interest is payable what? On drawing. They said, which of them is applicable? Which of them is applicable? We have number 1A, they said on drawings at the rate of 5% per annum. On drawings at the rate of 5% per annum, on aggregate capital contributed at 5%, on any contribution excess of aggregate capital at 5%, and at 5% per annum on the current account balances. The answer is very obvious there, is C, on any contribution in excess of agreed capital at 5%. Every other contribution that is more than the agreed capital, you have 5% if there is no agreement. So the answer here is C. A reason a business is not able to keep full set of accounting record is that the business does not make profit, the business is not a trading concern, double entry shows the true profit, double entry is expensive to maintain. Now, when they say business is not able to keep a full set of accounting record, what they are trying to say is that the business does not have what it takes to have a good accounting record. The business does not have what it takes. Now, they said A said the business does not make profit. You know, when you say business doesn't make profit as a reason why the business cannot keep full set of accounting record, it doesn't really make much sense. They said the business is not a trading concern. Business must not be a trading concern before it can keep full set of accounting record. Double entry shows the true profit. That double entry shows the true profit does not guarantee the fact that business cannot keep full set of accounting record. But double entry is expensive to maintain. If double entry is expensive to maintain, then it is very obvious that the business cannot keep a full set of accounting record. So the answer automatically becomes a D, because at that point it is obvious that the business cannot keep a full set of what? Accounting record. So the answer is what? D. Beauty started business with 40,000, made a profit of 50,000 and ended the business with 70,000 capital. What will have accounted for the closing capital? This one is still incomplete record. This one is still incomplete what? Record. Now let's look at it. They said Beauty started business. Now we have a formula to determine profit when we are calculating incomplete. When we are doing incomplete record, we have, they call it closing capital. They have closing capital. You add drawings. Whatever you have here, you have a value here, and then you less opening capital. When you add closing additional capital, whatever you have here, subtract it from here, and then you will have your profits. Now, let's look at the question that is before us here. They said Beauty started business with 40,000 and made a profit. They've already given you profit. This is your net profit. I'm going to replace these arrows with the figures given in the question. They said Beauty started with business That's opening capital. So your opening capital here is 40,000. Let's replace it. It's 40,000. And then made a profit of 50,000. Here is 50,000. 50,000. And ended the year with 70,000 naira capital. Ended his year with 70,000. And now said, what will have accounted for the closing capital? What will have accounted for this closing capital? That in that case, we are actually looking for the value of drawings. So how do we arrive at the value of drawing? Since there is no additional capital, we are going to remove the whole of this one. And then we are going to bring this 40,000. We are going to bring this 40,000 to this place. So this is going to give us a very simple equation. You have 70,000 plus X minus 40,000 is equals to what? 50,000. So we want to make X the subject of this formula. We simply have X is going to be equals to, let's go, 50,000. Let's start with this one, plus 40,000. Then we now subtract 70,000. So what will this give us? Let's go 50 plus 40 is 90,000. We have 90,000 minus 70,000. So you are going to have 90 minus 70,000. You are going to have 20,000. X is equals to 20. So drawings of 20,000 must have been what? Omitted. So drawings of 20,000 must have been made. So the reason why this guy arrived at 70,000 as a closing capital is because drawings of 20,000 must have been made. So let's look at this. The options. A, cash shortage of 30,000 was recorded. Drawings of 20,000 was made. Beauty was paid a salary of 40,000. The opening capital of 40 was invested. So the answer there is B. Drawings of 20,000 was made. Now, if sales is 12,000 and the gross profit markup is 25, what is the cost of sales? Drawings, the sales is 12,000 and then gross profit markup percentage is 25. What is the cost of sales? What is the cost of sales? Now, let's quickly go. Let's quickly look at it. Let's quickly look at it. Now, sales is this, and gross profit is... Now, let's look at it. Markup percent is 25. Remember, markup is calculated on cost, not sales. So since they are giving you markup, and then you are giving sales here, first of all, you are going to convert this markup to margin. So converting markup to margin, 25 over 100 is equals to, this is 1, this is 4. This is 1 over 4, which will give you what? 1 over 4 plus 1, which is equals to what? 1 over 5. 1 over 5, which is the same thing as 20%, which is the same thing as 20%. So we have converted markup to margin. And when you convert markup to margin, you will now be able to ascertain the true value of the cost of sales, because you cannot charge markup on sales. Now, let us go. For markup now, we said that margin is equals to what? Profit all over what? Sales. All over sales. That's it. Profit all over what? Sales. The cost of markup all over sales. Now let's quickly look at it. Margin is 20%. That's 20 over 100 is equals to P all over what? 12,000. 12,000. So what are you going to get here? You are going to have, here is 1, here is 4. So you have 1 over 4 times over what? 12,000. So you're going to have 4p is equals to 12,000. P is equals to 12,000 over 4, which is equals to what? 12,000 divided by 4, 12,000, 1, 2, 3, divided by 4 is equals to 3,000. So now you have given sales to be equals to what? Sales is 12,000. You have given profit is equals to what? 3,000. So the cost is what you are looking for. Normally we know that sales is equals to cost plus profit. Let's make here X. Let's make here S. So your sales is equals to what? Profit plus cost. So your sales is 12,000 is equals to P is 3,000 plus X. So it's going to be 12,000 minus 3,000, which is equals to X. So your X is equals to 9,000. So the answer is 9,000, which is B. So the answer here is what? 9,000, which is B. It cannot be A, cannot be C, cannot be D. The answer is B. The accumulated fund for a non-for-profit making organization is accumulated fund for non-for-profit making organization is asset plus liabilities. It cannot be asset minus liability from plus capital. Okay, asset, it cannot be asset minus liabilities and then capital plus liabilities. Now when you talk about asset minus, okay, asset plus liabilities, the whole of the credit side of the statement of financial position is asset. Then the whole of this side is liability. So the accumulated fund cannot be. Accumulated fund is asset minus liabilities, which is C. So the answer is asset minus liabilities, which is C. Now, use the following information to answer the questions. The following transactions were recorded in the cash book of Ibusa for the month of January 2019. Balance BF 200,000, commission received 180, receipt from Uja 98,000, electricity bill 40,000, rent 73,400, drawings 28,600, insurance. They say the total income for the month is dash. Very simple. When you talk, this is a cash book. This one you don't even need to write. Just add everything that has to do with receipt. We are going to start now with the balance BF. So write 200,000, 1, 2, 3, plus 180, 1, 2, 3, plus 98, receipts, 1, 2, 3. What will it give you? It will give you 4,780,000. 4,780,000. Now, if you observe this 4,780,000, you see that it is not in the option. That means they are not looking at the balance brought forward. They are not looking at the balance of last year. They say the total income for the month, not the previous month. So you are going to remove 200,000 from it, which is your balance brought forward, and then you'll be left with 2,780,000. So the answer is what? B. The answer is B. Ordinarily, they said that it is the income for the month. So whatever you have received for the month, the balance brought forward of 2,000 naira is the one for last year. So it's not for last month. So there is no need to bring it into the current month. So basically, it's commission received of 180 plus 98,000 received from Uja, and it will give you 278,000. All right, let's look at the next one. The next one says the balance brought down at the end of the month is the balance brought down at the end of the month is what? Now, it's a very simple thing. What you do is subtract what you have received from what is paid out. If we are saying that income for the month is 278,123, if that's what we have as the income for the month, then the balance brought down is going to be whatever you receive is going to be whatever you receive minus what is spent. So let's add what we have spent. Electricity bill is 40,000, 40,123, plus rent 73,400, plus drawings 28,600, and then plus insurance 12,800. What do you have there? You have 154,800. They say the balance brought down at the end, so it cannot be this. This is what you have spent. You spent 154,800. So quickly subtract what you have received from what you have spent. You received 278,000 and you spent 154. So let's subtract it. You have 278, 123. The value is 123,200. 123,200. Okay. $768. So 123,600. When you look at it critically, you'll see that the answer is not there. The answer is meant to be 123. The answer is meant to be 123,600. 123,200. 123,200. But it's not there, so you don't need to be panicked. You just have to move on. The total expenses for the period is, we've already written it, 154,800. So the total expenses is 154,800. Which of the following terms is classified as capital expenditure in public sector? I have explained that capital expenditures are expenditures that are spent on assets. Expenditures incurred in buying items that can last for more than 1 year. You say financial charges, construction, works cost, training and conference cost, wages and salary. So when you look at financial charges is a very ambiguous in nature. They did not specify, but construction works cost. Construction works cost include every other thing that is involved in carrying out a construction work. It includes the procurement of machineries and others. So the answer here is B. And then let's look at this. It said, use the following information to answer the question. Capital 1st January 2020 is this. Capital 31st is this. Expenses is this. Drawings for 2020 is this. Additional capital is this. The gross profit for the year is dash. We have done this. This is exactly what we did in few questions away from this one. Now, the formula is closing capital. Closing capital plus drawings minus opening capital minus additional capital is equal to, let's go, closing capital is what? Closing capital is capital at the end. They say is what? 2,530,000. So you have 2,530,000. 2,530,000 Then drawings for the period is 72 plus 72,500 minus opening capital is 1,934,600. Then minus additional capital. Additional capital is just 250,000. This will give us the value of our gross profit. Let's go 253,0,123 plus 72,500 plus is minus 1,934,600 minus 250,000. So your answer is 417,900. 417,900, which is 417,900. 417,900 is the answer, which is C. 417,900 is the answer. They said the net profit for the period. Net profit is simply gross profit minus expense. So the only expense we have there is 345. So just subtract minus 345, 900. 345, 900 minus 345 minus 345, 900. So you have 72,000. The answer is 72,000, which is D. And then the partnership is formed by one person only, two or more individuals, two or more companies, two individuals only. When you talk about partnership, partnership is formed not just by two individuals only. Partnership can range from 2 to 7 persons. So it's going to be 2 or more individuals. Partnership can also be 3 persons. So it cannot be 1 person only, cannot be 2 or more companies, it cannot be 2 individuals only. The answer is B. Use the following information to answer the question. And B, we draw 14,000 and this respectively at 8% annum for the partnership. The interest on drawing for and is just 8% of 14,000. Just calculate 8% on 14,000. 8%. The and is 8%. 8%, that's 8 over 100 times, what did she? Okay, 14,000. 1, 2, 1, 2. So you'll be left with 8 times 140. 8 times 140, 8 times 140 is equals to 1120. 1120, 1120 is the answer for interest on drawings for and 1120. Then use the following information to answer the question. And okay, the total interest on drawings to be charged to the profit and loss appropriation account is the total interest on drawing. If and is 1120, then what will be the interest on drawing for B? The interest on drawing for B is still 8%, but his own money is 10,000. So you have 8 over 100 times 10,000 over 1. This will cancel here, that will cancel here. So you have 8 times 100 is equals to 800. So the total interest on drawing is 1120 plus 800. It will give you what? 1120 plus 800. It will give you 1920. 1920 is the answer. So the answer is A. And then the last but not the least, it says Which of the following item is found in the profit and loss account of a company? A. Proceed from issue of shares, proposed dividends, directors' remuneration, and transfer to general reserves. Now, proceed from issues of shares. Proceed has to do with the money you realize from issuing of shares. It cannot be in the trading profit or loss account. Rather, it must be in the cash book. If they pay by cash, you receive, or if they pay by bank, they pay it into the bank. Then proposed dividend is always in the appropriation account of the company. But directors' remuneration, what is used to encourage the directors? Remunerations has to do with incentives or payment made to the directors that is probably outside his normal salary, and it must be accounted for as expense. So that will be in the profit or loss account. And the next one, they said transfer to general reserves. General reserves is basically in the appropriation account. So the answer there is C, director's remuneration. All right, so far we've been able to exhaust the 50 questions of last year WAEC. I encourage students to continue to go through this and then master these questions, because some of these questions may be repeated in the 2024 WAEC, that is few months from now, a few days from now.